great to have you guys here. Thanks for coming. So I've known some of these guys for quite a while. I think I met Christopher in Hong Kong in 2018. I believe that is when we met. And Mike, I think back when you were at CoinList, must have been 19-ish is my guess as well. And I met Claude in the hallway just now. But these guys are all long-time investors in crypto and also in DePIN. And you know, Mike at CoinList was helping raise capital and for projects before they were DePIN, and Christopher invested in a number of projects even before they were called DePIN as well, and then some afterwards. And Framework, obviously, Greenfield is obviously known for doing a whole wide range of stuff in the space as well. So I think I want to start with each of them giving a quick introduction on themselves and their funds, just so we can kind of place it, and then we're going to get into some more DePIN stuff. But what I also say is yourself, your fund, and a DePIN project or two you've invested in, so we can kind of get straight into that.
Yeah, thanks, Tom, and thanks, everyone. Okay. Thanks, Tom, and thanks, everyone, for joining in. My name is Mike Zajko. I'm one of the co-founders of Lattice. We are an early-stage venture fund based in the U.S. That we started back in 2021. And we've been investing in, like Tom said, in the space since before the space was called DePIN. A few of our portfolio companies, and because our fund is a little bit younger, a lot of them haven't launched tokens yet. So Dawn Internet, which is in the fixed wireless space, another one called Daylight, which is in the energy category, are two of our investments that we're really excited about. But generally speaking, it's a space that we think has a lot of potential to grow. It's been a tough year for tokens, but the best time is when everyone's doubting it the most.
Fair enough.
Hello, I'm Christopher Heymann. I'm one of the co-founders at 1KX. We started the fund officially in July 2018. Before investing with 1KX, we were founders ourselves for like 10 years. And while we were founders ourselves, we've also raised money from VCs, external capital. And the money that we raised from VCs were actually, like the VCs that we raised money from they were actually quite decent. But we always had the feeling, they could have had a much bigger impact on our success than they've actually had. And so when we got presented the opportunity to launch our own fund in 2018, that was like a very interesting opportunity then, because we could finally go to the other side of the table and kind of show, okay, we're going to try to make this better. So we kind of really try to kind of maximize the impact that we can have on the founder success along all stages. However, we primarily invest lead stage or lead tickets into seed stage investments. We're also doing pre-seed and Series A. Typical check sizes range from 1 to 3 million. And yeah, we are investing across the whole stack, right? Application platforms, middleware, DePIN, consumer. And one of the, right after we formed the fund, one of the first investments that we made, actually two of the very first investments were into Fluence and into Arweave. And I mean, even before we launched the fund, we privately invested into the Filecoin ICO that was managed via CoinList. So yeah, we've been hyper bullish on DePIN very much from day one.
Very cool, thank you. So my name is Claude. I'm from Switzerland. I started my career in private equity, but pretty much early realized that the companies that we're investing there are not exciting enough for me. So went into venture in 2019 and started investing in both crypto and traditional venture, and joined Greenfield 18 months ago. Greenfield is a venture fund out of Berlin. We have a seed and Series A stage venture fund, and also a liquid fund. We're also investors in Arweave. Filecoin is one of the projects I was able to do the CoinList sale with. One of the great, I think, DePIN projects that are here for a long time now already. And one of the projects that we might then talk later about, I'm excited about in the DePIN space is Glow. And Glow is a DePIN project that focuses on incentivizing solar. So new solar panels developed.
Which one is that, sorry?
It's called Glow.
Glow, yes.
So glow.org for anyone that wants to check it out.
Yeah, David has been a longtime supporter of DePIN Day and spoken at many things. You can't be in the space too long and not run into him, I think.
Yeah.
I know the panelists know him well. So I guess when you guys are looking at a DePIN project, are there any specific factors you are looking at that would make it compelling or not compelling, or anything? What's different about a DePIN project, or not even different? What do you evaluate when you're looking at making a potential DePIN investment?
I mean, like DePIN is like a very broad area, right? So there's like all kinds of like DePIN projects, right? And so like it's difficult to kind of like find like a few things like that apply to like every single category. But in general, we are looking for like the total addressable market size. So we've seen like lots of like opportunities that sounded like very interesting, but ultimately like we felt like the market was like in the end a little bit too small for to sustain like venture economies. What we're always looking for really is growing demand. So we want the projects already to have demand, and not just like from one or two friends, like who are giving you like some, I don't know, like some 5K deal or something like that. But we want like really sustainable demand, like from real industry partners. That you won against, like ideally, like against like Web2 incumbents. That's like really like ideally what we're looking for. And then obviously we want the founders, to have like a lot of like domain expertise. So I hope that's kind of like roughly three abstract enough things.
Yeah, the one I would build on top of that is, DePIN within the crypto space is one of the sectors that probably has the most overlap with the real world, with the exception of maybe real world assets. So in that regard, probably the most important thing we're looking for is founder to market fit, and finding founders that, not only is the composition of the team maybe have some crypto experience, but probably even more important, at least initially, is they have some deep knowledge, expertise, and industry expertise within the space they chose to build in. So whether that's wireless, energy, compute, what we noticed I think when the space got a lot hotter as a sector, everyone wanted to be a DePIN founder, and they would build something that maybe they didn't even have any experience or knowledge of that market. So for Lattice, whether the composition of the team is a bit of crypto and then a bit of industry, that's high on the list for us.
Yeah, I think adding to the points that my colleagues mentioned, I think especially for a DePIN startup, what they've been really good at historically is creating a lot of supply of a certain asset. In Filecoin, it has been file storage. In Helium, it's these internet connectivity spots. But a lot of founders think a lot about what kind of areas could we apply the same model to. But what we try to ask or understand a lot, where is the demand for whatever supply you're generating? Where is that coming from? And can you actually then also sell that supply, similar to what you said? Maybe already have contracts for then also providing that supply to someone. And additionally, I think what we see with Glow, for example, is also good if founders have had previous experience in crypto and can now, from these experiences in crypto, apply it to this new project or company.
I think Glow is actually an interesting exception to the rule, which is, I think, what Christopher said, and I think Mike kind of implied, was a lot of successful DePIN founders have expertise in their particular domain, and DePIN becomes the way to scale and solve that problem in a better, faster way. David at Glow is almost the exception to that, where he has crypto experience and got passionate about solar and tried to figure out how can I use crypto to scale solar. So he is the exception to, I think, what is more common in DePIN, which is founders with domain expertise discovering crypto as a way to scale in an unusual way. The other point, though, it's worth digging into a little bit. You mentioned supply versus demand, and I think this gets a little bit to Mike's point, which is we find lots of people in almost every sector willing to contribute their data, bandwidth, hotspots, right? But the hard bit of DePIN is you actually have to sell, and you actually got to get the customers. And so I'm going to guess that is a little bit what Mike's referencing in terms of fit with the market, because you've got to be able to get customers. in a way that has not been as much a focus for the rest of crypto.
And that is also like what makes DePIN so interesting for us as a fund, right? Like all of the other industries within crypto, they are like so reflexive on like crypto's growth in itself. With DePIN, we should grow like no matter what's happening with crypto, right? I mean, like if Bitcoin drops tomorrow by 50% or whatever, right? DePIN revenue should still go up, right? Because we are basically like bringing like the real world onto the blockchain. We're not RWAs, but bringing like real world value onto the blockchain. And yeah, that's kind of like what makes it really exciting for me.
Yeah, I think there's some stat out there that 50% of the revenue for most YC Combinator startups comes from other YC Combinator startups. And what that demonstrates to me is that a big part of your early sales comes from people people that want to see you succeed. They believe in your product. They're not going to just hand over money, but like you need to know people in the industry. And I think that's equally true within DePIN. If you can't open these doors, or you don't know the people or where those doors are even located, it's going to be really challenging to get that initial revenue going. I think a good example, within DePIN today is GeoNet, which does the high precision GNSS or GPS. And the guy, Mike Horton, he'd been working in that industry for probably 30 years, knew all the people to talk to, presented a solution that was better than what was already available, and they trusted him. And that, that counts for a lot. So it's not that to say someone can come in from the outside and totally disrupt an industry, but it certainly helps to be able to walk into a room and not just be the guy that has some crypto project, but someone that they know and they trust that they're probably building something for real.
On the other side of that, on the crypto side of it, how do you guys approach token economics? Because there's a wide range of models, and I think what Christopher is mentioning is revenue can increase completely detached and decoupled from the crypto market moves. But you do have a token at some point, so how does that flow through? And there's a lot of different models that DePIN has deployed, some very directly, some very indirectly. And is that something you spend a lot of time on? Do you leave it to founders to do? Are there models you like, models you don't like? Like, how do you address kind of the token piece, since that's ultimately how you are probably going to make your rewards, your returns, sorry.
Yeah, I guess we're still in the phase where a lot of these models are tested out. Some try completely new variations of it. I guess if you look at the historically successful ones, and maybe also now the model that Glow kind of follows, is that in the beginning they tried to bootstrap supply hard by having a big amount of tokens, or just a large amount of incentives for the early contributors in the network to then join for it to get more competitive. And similar what we've seen maybe also with Bitcoin, right? The early people were able to mine the Bitcoins on the laptops, but now today you need a mega data center or a mining operation to still be competitive. So to start out with a big incentive pile for bootstrapping the supply, and then from there are various approaches now how to build the rest of the tokenomics. And I also think depending on the industry and how your demand looks like, that I don't know if there's a once for all solution, but that there are a lot of iterations going on right now.
Yeah, there's certainly not a one size fits all solution. However, I'm a little bit more skeptical with like the incentivizing supply side thing. I mean, we've seen this with Filecoin, right? I mean, again, I love Filecoin, right? But like at one point, you're doing like Filecoins, like early days, they were emitting $1 billion to miners every month. And that's just like an absolutely insane number, right? And so, and there was not even like close, like not even like a fraction of, like that was actually being used for like real storage. And so, yeah, like the one thing, like that we know in crypto, like what we can easily do is we can incentivize supply very quickly. And so, like what I rather focus on is, how do we get demand, right? How do we really like build up, like a very big kind of, like pipeline of demand partners? And once the demand is coming, then yes, we can turn on the supply like that, right? Because we have seen that playbook all over and over in crypto.
And I agree that totally do, but I'd also say there are projects out there that either have or claim a lot of revenue, but that revenue is completely unconnected from the token. And that is more what I'm I don't know how long that persists.
That is like my biggest criticism of the space right now. Yeah, currently there's so many projects that are just, pasting like a screenshot of an Excel file onto like a Medium blog post and claiming, yeah, this has been like their revenue, and there's like no, oversight or anything like that. Yeah, unfortunately, like it works.
Right. I'm talking hundreds of millions. There's 2 projects with over 100 million of revenue with no.
Exactly. I mean, we're not going to call names, but yeah, exactly. Like we are seeing these things, and unfortunately, this works, right? People are really buying into these stories. Yeah, and I wish there would be like a little bit more scrutiny for actually bringing that revenue on chain, so it's trackable for everybody.
And buy and burn would do that. Like if you took 80% of your revenue, had to burn token with it, that would pull that. It'd be very visible.
I mean, I'm not sure, right? If buy and burn is the right approach for everybody. I think when you're a startup that is in a growth mode, right, and still scaling a lot, it might be a better way to kind of use that revenue to kind of grow even faster. And so while I like the buy and burn model, I do think if you're getting that too early in your life cycle, it's going to be detrimental to your growth.
Yeah. Something I'd add on the token side is you can come up with all the schemes and all the token designs you want, but if no one really wants to use whatever supply you've generated, you can only delay death for so long. Something that I think we've been fortunate to witness is that because a lot of our portfolio companies, they're kind of standing on the shoulders of others, they've gotten to learn from their mistakes and correct or at least experiment with new models. And broadly within crypto, you're starting to see, given this is a financial space, for the longest time it was we have one financial instrument, we have a token, and we give that token for everything, and it serves all purposes. But more teams are starting to experiment with debt as an instrument, and you can use debt programmatically as long as there's probably some revenue to pay down that debt, or you pay people in stable coins because you're generating revenue, an actual USD, not just the base asset, and then the base asset, the protocol token, is used for other purposes. So I think over time, if you look at any projects, financial stack, the token will be just one of many tools within the toolbox to leverage to grow.
That gets a little bit of a question along those lines. We're sort of taking a separate angle on that. Are there reasons you guys have turned down DePIN investments? Like anything you can think about? I mean, it sounds like Christopher already answered that question by saying he turned down projects that he thought were addressing too small a market. That sounds like that's one reason you have. Are there other reasons you guys have turned down projects?
Yeah, I guess maybe too small of a market is a good one. The missing demand, or not even also understanding that this is really core to building a DePIN protocol, I think is the second one. The third one also that there's always a flavor of the month in crypto, right? A certain narrative. So I think maybe a year ago or maybe 14, 15 months ago, there were so many people racing for a certain DePIN for every kind of niche topic you can think about. Every piece of hardware you have in your house, there was a DePIN for it. Yeah, these waves.
The DePIN fridge. I did not see the DePIN
no, but
fridge pitch.
I'm not even kidding. I mean, sometimes you should keep these stacks just to see how many of them are actually doing. So long story short, the people that apply to a big enough market for something that they ideally have industry experience with, and there is clear demand. And I think if these three things are met, then there's a good chance. And if they're not met, then we have also declined some of them.
To add to that, probably one reason we've turned down a number of deals is typically for a lot of these DePIN projects, there's some incumbent business that exists in, the traditional internet stack that does the same exact thing. And, oftentimes, team will say, hey, we can do this and it's going to be, 50% cheaper. But usually the trade-off for that 50% cheaper is pretty significant in terms of performance degradation, what the experience of using that is. So I think if you're selling in traditional businesses, not crypto projects, and you're presenting a solution that only beats marginally on price, I think it's going to be really challenging to get companies that don't care about crypto, don't want to bother with it, are probably a little skeptical to switch over if your advantage is really, only, slightly nuanced for the average person that's making that decision.
Yeah, I mean, it also goes to stuff that we've discovered at Fluence, where you can save the company a lot of money, but that will inevitably, if it's too much, it actually might reduce the incentive from the person making the decisions whose budget themselves goes down. So if you're saving a lot of money, you got to get to a C-level person as opposed to just the IT head who may not want to take any risk for a budget cut and doesn't make a bonus because he saved a lot of money. So you kind of, that's where the feature set, the safety, the security, the support, all that becomes very relevant. It's not just a price game. So that's certainly something we've seen. What sectors within DePIN are you excited about? Have you looked at, or anything you want to kind of call attention to, where you may think there's opportunity, or you've seen tons of people addressing?
Yeah, I think one of the things that I've been thinking about together with my team is how to apply it in defense, right?
I guess, sorry?
In defense.
Defense, wow.
Yeah, defense, yeah. Because, part of our team has been working in defense before, and two of the core things that are really important there is cost, and the other thing is reliability. And maybe you could also say, decentralized maybe set up for certain set of defense mechanisms. So there are startups that are doing that in a drone space, but maybe there would be also other ways to apply that. So that instead of, I don't know, the US military setting up 400,000 drone defense systems around the country, that you can incentivize people through a DePIN system to do that on their own or
But wouldn't those drones need to have armaments, which are, hard for individuals to supply?
We need to. It's just one of the ideas we're looking into, right? But if you have some of the drone defense systems, they're not using arms or actual machinery to take down drones. But for example, nets is one of the ways you can defend against drones.
Gotcha.
Or
drone
also
defense.
just an alarm system basically for the household-sized drones that maybe not show up on the flying typical radar screens. Yeah.
Cool.
Actually, the same. Pretty much the intersection of defense and drones is something we think is pretty cool. I also think energy. These guys already made some investments into daylight and glow. We haven't, so we're kind of also still looking for something in the energy sector. But yeah, there's tons of very interesting overlaps with DePIN and the real world.
Yeah, one of our portfolio companies is sitting in the front row, which is Over the Reality. I think the expectation on our side is that we're on the precipice of a lot of changes with how computers and the world start to merge more. So that's embodied AI with robots or autonomous vehicles. And a company like theirs is set up to benefit from that tailwind, because a lot of the way that you can train these models requires the input from a network like theirs.
Are there investments you guys have done that other people didn't do? What's the most, and I guess this is also a little strange because, again, back to Christopher, as you know it, I'm guessing some of the early ones you did, nobody else was doing because you were the first. But for you guys, maybe there's other ones like that. I don't know, other guys have other ones, but is that right, when you did some of those?
Yeah, definitely our weave back then. Yeah, I mean, we worked with like Awi from like pretty much almost day one. And we were pitching that to literally like every partner at like every crypto VC. And yeah, like, I don't know, like they turned it all down until, you know, like a year later or something like that, all of them poured in, but, you know, like at much, much higher prices. But, you know, like at that point, you know, like it became like very, very frustrating, you know, because you were like explaining all of like the mechanics, etc. And they just didn't really seem to get it, or maybe they didn't really care enough. But then, yeah, like, you know, sometimes it just takes a little bit of time, you know, like for people, for like things to become like more obvious. And then everybody else followed in. Yeah.
Well, Arweave is an interesting case because it is a math exercise, right? It's not a, I think this, I think this. It's like, here's how the math works to make something permanent, which is presumably more comprehensible than just buying into an overall concept.
Yeah, yeah, exactly. And I mean, they had like all of like the proofs back then, etc. Right? You know, like they needed to still kind of like work on some papers, but you know, this was like pretty much like in the shadow of Filecoin, right? Of like Filecoin's, you know, like really big ICO that they did back then, and Arweave was just like a tiny project. Like FTV back then was like, you know, below 10 million. You know, you could only like, you know, trade it mainly like OTC. We were like the main liquidity source for like a lot of the miners back then. But yeah, like I mean, it turned out well, right?
Interesting.
It's pretty rare that we end up investing in something that's totally contrarian in crypto. The best I think we can usually hope for is we're just a little bit earlier to a narrative, and for that reason, maybe some other funds aren't paying attention yet. Or in some cases, you know, for instance, we led a bridge round into daylight during the bear market, and you know, after FTX collapsed. Because, you know, at that time, not a lot of investors were still both interested in DePIN as a category, and then just a lot of people weren't investing at all. And they needed more money to grow, and so felt like that was the right time to double down, and, you know, that's worked out. They don't have a token yet, but we feel great about it.
Yeah, maybe one of the things that is out there is an investment that we are about to do right now is in Africa called Share. And what they're doing is they're building or kind of a DePIN network for ISPs. So it's very, very fragmented market in Africa, and they're making it through a DePIN network or incentivization, to incentivize people to provide more local nodes for this ISP network, so that the internet coverage in these regions becomes dramatically better.
How do you guys think about liquid tokens versus an actual private round? It sounds like, I think you mentioned you have a liquid fund. So, and even just from the venture side, given the token is sort of arbitrary from a maturity perspective, is there a bright line between investing liquid or illiquid, or how do you guys navigate that space?
I think for us it was starting out as a venture firm with the idea that you invest in day one, and then maybe after 6-7 years it is a bigger company with a liquidity event. Of course, this is very different in crypto, right? The average time from seed to token is now 2.5 to 3 years, even though it's getting bigger, but that's the number that I last heard. Investing just in liquid tokens is something that we're also learning to approach, because there's still a lot of influence on the majors on how the rest of the market is trading, even though since a few years we've always assumed that this decoupling starts to happen. So if a project is doing good independently, that they will perform well, but to this day, if Bitcoin is dropping 5%, the rest of the market is also impacted by that.
But are you investing in liquid tokens also in the DePIN space?
No, we have not done. We would do it, so we would consider it, but we have not done it at the moment.
And so the liquid fund is more larger or more Bitcoin in those type of products, or tokens?
No, for us it can be any kind of size. For us, what we do is teams that we know that have fundamental traction. So maybe they have revenue or they have growing users, and that we feel the market is undervaluing at the moment, based on these points. And it could be a project also in the DePIN space. For example, let's say a DePIN project that does $1 million in revenue per month, but its FTV is way below from what you would see from comparables.
Right, I just think that's an interesting piece because there can be, there's a lot of projects we know where they're trading now below where some of the private rounds were, right? And yet they are more mature now, right? So it doesn't mean the revenue is higher than the market cap, but crypto investors are fickle. And you'd think with however many, it was 16 million or something like that tokens out there, that there's a lot to choose from and a lot of liquidity spread around, that there could be real opportunities in the liquid space as well. And I'm curious how you guys see that.
So we also have a liquid fund. However, kind of like the problem with liquid investments is, specifically like, for like smaller or medium-sized caps, is, you might invest there, but you have like zero corporate controls. Right, and so like what we've often seen is like that teams like in the bear market, right, like when the token price just kind of like goes down and down and down, and they don't want to sell at those prices, they're starting to sell equity, right? And so then they have like two separate classes of investors, one set of like equity investors and one set of like token investors, and both of them want you to do different things. And that's something like that is definitely not healthy. And we don't want to be like on either side, right? We want to be on the side of the team, which has like this. We want to have the same incentives as a team, right? Ideally, equity plus token, or like either or of them. And so yeah, I mean we've done a few liquid investments as well, but yeah, like we've also kind of like burned a little bit by exactly like this happening in the past. Yeah, I think that's it.
Liquid investing is not a primary focus for Lattice. We have made some liquid investments for token projects that we'd almost classify as liquid venture. So
plenty are, right?
Yeah.
Like it or not.
Like you said, they're below where their Series A round was, or even their seed round in many cases. So those are projects that we will consider. That being said, there can be things going on behind the scenes that if you're taking a liquid position and you don't know who else is holding the token and who else might become unlocked, and then all of a sudden there's this massive sell pressure. So all of the metrics could be going up and to the right, whether that's revenue or users or whatever they're trying to do, but someone else has to exit and get liquidity on that investment. And you're seeing that, if anyone's been paying attention to Helium over the past year, it's been pretty much down only despite all the metrics going up.
Great traction, yeah.
And that's because two of their earliest investors are getting towards the end of their fund life cycle and need to get liquidity. But if you didn't know that, or you were coming in before that sell-off started to occur, you're in for some pain.
Yeah, you could make all the right calls from a fundamental perspective and still lose because of the technical sell pressure based on a couple specific institutions, individuals, whatever. Yeah.
Yeah, I mean, CowSwap was this week a good example because the trading volumes on CowSwap are on all-time highs. Also, the weekly traders, the recurring traders, and there's one whale, I don't know, Tuesday, Wednesday, started selling 30,000 cow every minute, and the team tried to contact him, but
sorry, which project was this?
CowSwap.
Okay.
Yeah, and he also sold the cow through 1inch, so maybe he was, I don't know, just fed up with the team or not happy, or someone that was not happy with how the token is performing. And of course, because you don't know who this holder is, you don't know who this wallet is in many cases, even if the fundamentals, as you said, are pointing in the right direction. There's a lot of opportunity in liquid, but there's of course also a lot of risk.
Yeah, well, I think Mike makes the point, there's opportunity, but you have to know, there's a different skill set because you got to know a lot of other things going on. Interesting. Well, listen, there's people here who, what advice would you give to people? The two sets of advice. First question to DePIN founders who want to raise, and next question to people who are looking to invest in DePIN projects. Because everybody here, there's a lot of founders here, but there's also people here who invest, who have accounts, who own crypto, who are probably looking at DePIN projects as well. Now they're looking at they may not be looking at the private side, but maybe they are. So both, what advice would you give to founders in DePIN who are raising, and then similarly, what do you give to people here who could be looking to invest from kind of a private or even most likely token retail side? Mike, you want to start off, Mike?
Yeah, I can start. You know, for the founders in the room, I think, you know, we already talked about it a bunch, but really having a very dialed-in story on how you plan to generate revenue and why. Not only would you, if there's a Web3 alternative, would you be superior to them, but why you'd be superior to the existing incumbent solution that exists outside of crypto. Seems like a boring answer, but like it is really the most important one.
I like to say you come for the you get the customer for the price. You come for the price, but you stay for the service and the other attributes.
Totally. And then on the in terms of what to look for from an investment perspective, you know, it's tough because again, you can look at the fundamentals on a project and it seems like everything is going well, but the token does not go up.
I've been burned by this personally.
And that can be very frustrating. So I think there's one side which is like, hey, I'm going to be a fundamentals-driven investor. I'm going to look for revenue, and I'm going to make sure that there's some way that the token captures the value of that revenue, and that's probably a fair way to go. The other one would be anticipating what could be interesting narratives that could be coming up and how a project could benefit from it. And if you go back to when ChatGPT first came out, compute was kind of a dead narrative for a while. Like people weren't paying attention to it, but then everyone was like, oh wow, like compute's super important again because of AI. And a lot of the token projects that were out there at the time that weren't, you know, the most celebrated or hadn't been doing very well, all of a sudden started to pump. So if you'd anticipated or saw a little bit into the future that AI is going to need compute, that would have been a great trade to make, even if the fundamentals didn't match up, just because the narrative was going to come along with the project.
Mike is saying invested memes.
Yeah, advice for founders is know your customers well, right? I mean, I've said this like on another panel this week. You should be spending like 50% of your time, you know, like talking to your customers. You know, you kind of like need to intimately like understand what they want, what they need, and you know, based on that, right, you need to kind of like, you know, understand your cost of sales, you know, like the margins that you're gonna charge, etc. You know, like just kind of like a lot of like, you know, more boring Web2 stuff, but this is really like, you know, what this is, right? You need to kind of like play the Web2 game, and then, you know, like sprinkle the Web3 advantage on top of that. And so really, that is kind of like my main advice, just really know your customers as well as possible. Build up distribution funnels, you know, that scale, and, you know, don't just rely on, you know, like the 5 connections you made, you know, like by being at one conference, right? So like build up these kind of like sales funnels. And in terms of like investments that I would recommend, I mean, it depends on like the investment horizon, right? You know, if you're like looking to, you know, like, I don't know, get in and out within like 6 months or something like that, then I would rather look for, you know, like some of the newer launching DePINs, you know, because oftentimes, you know, there's like a little bit more hype around them, you know, like, and so, you know, things can, you know, like, and there's like, you know, a lot kind of like more compressed supply on the market, right? So, you know, like you can have like much faster like value appreciation. However, if you're like really like similar to like a venture investor, you know, like have like a longer holding period, you know, like 4 or 5 years, etc., then I would definitely go for the projects, you know, where everybody has vested, the revenue is kind of like growing very, very nicely year over year. You see like a lot of like those things happening. You know that the company is behind it is like well capitalized, and now all they need to do is just kind of like keep executing, and those are, in my opinion, like the most obvious investments.
Yeah, I agree with what has been said. So the focus on the revenue, the focus on the customers. I think what I also like to talk to with founders is just getting the basics right. So there's so many tools today on how to educate yourself, on how to fundraise, on how to present, how to pitch, what kind of KPIs to know. So if you do that just right, you're already 80-90% ahead of a lot of people out there. And if you look for investing into DePIN projects, I think additional to what they have said, what I like to do often as well is for these conferences like this, side events, especially when it's recorded, you have a lot of founders of maybe the next big project that starts talking in front of an audience of maybe 50 people, 60 people, and going just through these talks and not only looking at the fundamentals and maybe what topics are interesting to you, but then maybe also who are you resonating with? So do you like this team, how they present the problem they're solving? And so that way you can build kind of a, maybe not a personal connection, but at least it's more than just like looking on paper what project is interesting for me. Yeah.
Yep, fair enough. Well, I think those are some great insights. So thank you all for joining. Really appreciate it. Let's give a round of applause for the panel. Thank you, gentlemen.